Here's the Elliott wave forecast for May 6, 2011. The Nasdaq 10-day chart. It's hard to call what this rally was off of 28.10 to 28.45 intraday, but hopefully it's not an upward two because this would be a downward three if this is an upward two. But if this is a fourth, and then we saw a five at the close, hopefully. Um, if this turns to a three, though, we have to watch the futures at around 8 o'clock tomorrow. I mean, 8 o'clock tomorrow to see how the gap is. If the gap is minor and reverses into a upward two, then that'd be great. But hopefully it doesn't gap down too hard because the commodities are getting crushed. I mean, silver. This is the ETF for silver. Just absolute carnage. It's just insane. And I know I never wanted to even touch gold or silver ever. I still don't want to touch them. And I just thought, like, in my head, I never said this on my website. I just knew that silver was in a bubble. And it's like, it made no sense. It was just absolutely nonsensical move to the upside. And it's broken through a lot of support. I mean, a wave four would have held 41, but now it's in at least a wave two, and a wave two could drop down to 26 at worst. And I don't think it's going to be easy to recover from that, but gold recovered off of these lows. Let me go back to the HUI. Go back all data. Because HUI had the same type of crash down from 510 to 150 or 180, and then it rallied back to higher highs. So I don't know if it can happen again, though. I mean, I can imagine silver doing that, but this is the USO, which is the ETF for oil, and I can see it going down to 32 to test the previous. This is I wouldn't call this a four, but support is around 32, and I could see it falling that to that level because it's just insane. What happened today was pretty insane. It's like all commodities across the board just went. I mean, it's good for the Well, for the stock market, short term, it is kind of bad because it'll drag the indices down. But for the long term course of or long term health of the economy, it's actually better because oil prices shouldn't be this high. They're just. Can you imagine if uh, whatever happens in Libya is over? Because the entire situation with oil was ignited when the war in Libya started, and that was probably the catalyst for the oil prices to move higher, and all the unrest in the Middle East and blah 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 blah. But anyway, for the Dow, this could be wave one, wave two, wave three, wave four, wave five at best, and we must not gap down in a third wave tomorrow, basically, because this would be wave one, wave two, wave three, or worse. But at best, this is five waves down. For S&P, best case scenario, this is five waves down as well. One, two, three, four, five. And best case scenario, we rally back to 1356 approximately, outperforming five waves down. That'd be the best case scenario. Worst case scenario is that we break through 1328, which is 0.618 support of the entire rally that we've seen in the past couple months. So we got to watch 1328 tomorrow, and you must not break into a third wave. That's a wrap.